If you've been refused a mortgage, don't panic. There's loads of reasons why this might have happened, and the key thing to remember is that every lender's different. Just because one lender said no, it doesn't mean there aren't loads out there that might lend to you. People are declined at different stages, so often it's before applying, your bank that you went to or broker has said no on face value, which is why it's so important you get the right advice first time and speak to somebody who knows what they're doing as a real expert in the field. The next stage is agreement in principle, so you approach a lender formally and they've said no based on credit score or credit history, or something to do with affordability. Often the next stage is mortgage application. People are declined here typically because there's more information that the lender has looked at. So yes, you may have been approved in principle originally, but now they've seen your bank statements, they've seen pay slips, proof of income, proof of deposit, and all sorts of other things that actually something there they're not happy with. And sometimes it does happen after application. So once the valuation's back in, maybe there's something wrong with the property, it may have downvalued by the valuer, or it may be that there's something construction-wise with the property they're not happy with. Equally, whilst there's different stages people can be declined, there's also very different reasons, the most common of which is credit score and credit history. So late payments, defaults, CCJs, people may have had a bankruptcy in the past. Every lender's different in the policy and what they do and don't accept. So again, just because you've been declined for one type of credit issue, there's maybe lenders that will consider that. Some lenders are really tight in what they'll do. They'll never lend to you if you've ever had an issue. And there's others that will accept severe things that may have happened yesterday. So it is really a case of making sure you're matched with the right one. Income-wise, every lender again accepts different forms of income. So you may have, if you're recently self-employed, some lenders want to be seeing a long track record of income over a number of years. Others are happy with 12 months. Maybe you've got variable income and they're not happy with the change in incomes for commissions or bonuses, things like that. Maybe the contract time, or if you just started a new job. Loads of different reasons. Again, policy very different lender to lender. And then the other most common one really is affordability. The important thing to remember is that every lender has their own range and what they deem is affordable. So for the same borrower with the same income, you may have a lender that caps it at 3 times. So let's say you combined income of 50 grand, that'd be 150,000 then cap the lending. Where there's other lenders that may do over 5 times, which would be 250 plus. So there's a big range of what's affordable depending on the lender that you go to. There's loads of other reasons as well, things like that are less common, maybe some property issues or deposit types, but whatever it is, whatever the reason, it is essential that you speak to an expert and get the right advice.